Level 1, the paper trader. $10,000. That's what the demo account gives you. It's not real, but the chart moves like it is. You click buy on a stock you saw mentioned in a YouTube comment. It goes up. You sell. $340 in 4 minutes. You made more than your hourly wage at the coffee shop without leaving the chair. The Discord is full of people posting screenshots with green numbers and rocket emojis. Someone made $1,800 today. Someone else made $640 in the first hour. You post your win. 4 people react with fire emojis within 30 seconds. The next trade goes red. You refresh the account. The loss disappears. Balance back to $10,000. You try again. This time you're up $890 by lunch. You stand at the window and imagine what this looks like with real money. You open 3 positions at once because the account lets you. 2 go green. 1 goes red. You close the red one and reset before it gets worse. A YouTube ad promises to teach you the one pattern that works in any market. You watch the free preview. The guy made $4,000 in a day using something called support and resistance. You print a chart and draw lines on it with a pen. The lines make sense. The pattern is obvious once you see it. You wait for price to hit the line, then buy. It bounces exactly like the video said. You sell at the top. $1,240. That night you scroll through the trading subreddit instead of sleeping. Someone quit their job after 6 months of trading. The comments are half congratulations, half warnings. You read the warnings but you remember the $1,240. The next morning you're back at the desk before your alarm goes off. By the end of the week the account is up $3,670. You open a tab for a real brokerage. Minimum deposit, $500. You check your bank account. $2,247. You could start with $500. Maybe $1,000. The demo account says you're ready. You close the tab. You reset the account one more time. Balance, $10,000. You tell yourself you'll go live next week. The button still doesn't cost anything. Level 2, the convert. You've been profitable for 3 weeks on paper. The demo account says you're up 42%. You decide it's time. You move $2,000 from checking to the brokerage. It clears in 2 business days. The platform looks the same. The charts look the same. The buttons are in the same place. You take your first real trade. 100 shares of a stock you've been watching. Entry at $14.32. It moves. Up 6 cents in 90 seconds. You're up $6. You feel it differently. Not the number. The fact that it's yours. $18 now. You think about closing. You don't. Then it drops. Fast. Faster than you expected. You're down $4. Then $12. You tell yourself it's fine. It steadies at $14.26. You're down $6. You close the position. Negative $6. Plus commission. Negative $8 total. You sit there for a minute. It wasn't supposed to feel like this. You take another trade. Same stock. Entry at $14.29. You're going to get it back. It moves down immediately. You're red within 10 seconds. You don't close. You wait. It has to come back. Negative $22 now. You close. Your account says 1970. You've been trading for 11 minutes. You don't take another trade. You watch the chart for 2 hours. The stock goes back up. Past your entry. Past where you would have been profitable. You close the platform. You don't look at it again that day. That night you think about the trades. You replay them. You know what you did wrong. The next morning you're back. You tell yourself today will be different. You take a trade. It goes green. You close it fast. Positive $14. You feel the relief more than the win. Second trade. Red again. You hold it. You're sure it'll turn. Negative 38. You close. 1946. You're down $54 in 2 days. You Google, why do my trades always go red immediately? You learn the word slippage. Slippage. The difference between where you wanted to enter and where you actually got filled. You look at your fills. Every single one is worse than you clicked. You realize the demo account didn't have slippage. It gave you the price you wanted, every time. You read about limit orders. You read about market orders. You read about bid-ask spread. You close the tabs. You know what the problem is now. 1946. You haven't told anyone you're trading real money. You turn off the monitor. Tomorrow you'll use limit orders. Tomorrow will be different. Your phone buzzes. Account balance notification. You don't open it. Level 3, The Believer. You spent $297 on a course called Mastering Market Structure. Then you spent $197 on another one called the Institutional Entry Method. You finished both in a weekend. The Discord has 14,000 members. A pinned message says, "We don't chase. We wait for the setup." You read it 3 times. Your chart now has 9 indicators. RSI. MACD. VWAP. A 20-period EMA and a 50-period EMA. 2 volume bars. A Fibonacci retracement from a swing high 2 weeks ago. You feel more prepared. The first morning, they all align. RSI oversold, price at VWAP, MACD crossing up. You enter long. It drops 12 cents in 4 minutes. You wait. The setup was perfect. The setup is still perfect. The market is wrong. You close it at -$43. You open your notebook. You write down exactly what happened. The RSI was lagging. The MACD signal line was delayed. The institutional entry zone was slightly off. You adjust the parameters. The next day you take another trade. The indicators align again, with the new settings. It drops immediately. -31. You post the chart in the Discord. Jake, the mod, replies within 4 minutes. Classic fakeout. The institutional players swept liquidity before the real move. You screenshot it. You add liquidity sweeps to your checklist. That was the missing piece. The desk acquires layers. Printed charts. Sticky notes. 3 different color highlighters. An energy drink you didn't finish yesterday. The next trade goes green for 11 seconds. Then it reverses. -56. Ryan in the Discord says he had the same setup. The spread was too wide at that time of day. Try trading the first 15 minutes instead. You add it to the checklist. Your account is at $1,146. Down $854 since you funded it. You have a spreadsheet now. 41 trades. 31 losing. You add a column called reason for loss and fill in every cell. Lagging indicator. Bad spread. Early entry. Fake out. Chased the candle. Wrong session. Wrong ticker. Slippage. Every trade has an explanation. Every explanation is specific. The problem is always identifiable in retrospect. You find a new YouTube channel. Smart Money Concepts. The guy has 800,000 subscribers and trades a model he says the banks use. You take 9 pages of notes in 90 minutes. You remove 3 indicators. Add 2 new ones based on the new model. The chart looks cleaner. More professional. This is the one. You can feel it. That night you scroll the Discord from bed. Jake posts a screenshot. Account up 4% today. Patience is the edge, he captions it. 43 people react with fire emojis. You are one of them. You wake up at 6 a.m. pre-market is already moving. You have your checklist open. You have your rules. Everything lines up. You enter before the open. The open gaps down 40 cents. Your stop was too tight. You're down $98 in 8 seconds. You sit back. You breathe. You already know what went wrong. You write, never trade the open without a confirmation candle. It goes on the checklist. The checklist is now 2 pages. The account is at 1,048. You have been doing this for 6 weeks. You have never felt more like you understand it. Level 4, the Wipeout. You've been down before. This isn't that. $1,048. 8 weeks in. Down 950 from where you started. But you've done the reading. You've fixed the checklist. You have the new model now. The checklist is 2 pages. Every rule on it came from a real loss. That means it's right. Pre-market, a ticker starts moving. Up 18% on earnings. Volume is massive. It's exactly what the smart money model is built for. You draw the zones. The previous day's high. The gap fill target. A clean area of demand at the open. It's textbook. Jake posted it in the Discord at 6:47 a.m., watching for a pullback entry. Classic range expansion setup. 38 people react. This is the trade. The one you've been building toward. The open runs up, then pulls back exactly to your demand zone. You enter long. $800. Everything left. For 90 seconds it does nothing. You breathe. You wait. This is what patience looks like. A red candle forms. It's just a wick. This is normal. A second one. Larger. Jake says, don't move your stop. Let the trade breathe. The stop is below the demand zone for a reason. The stop triggers. The position closes. Negative 312. Account, 736. You don't move. The price recovers. It moves back up through your entry. Then through your original target. If you had held the trade, you'd be up $180 right now. You watch it happen without you. You enter again. Chasing. It reverses the moment you enter. Of course it does. Negative 198. Account, 538. You size up. You need to get it back in one trade. You know this is what you're not supposed to do. The price doesn't pause. It goes down. Negative 200. Negative 350. Negative 490. The account liquidates. Account balance, $0.00. You sit there. You don't close the tab. The lamp is the only light. It's 9:47 in the morning. Your phone is face down. You don't flip it over. 20 minutes later you open the Discord. Jake has posted again. Beautiful continuation on that ticker. Textbook. 67 fire emojis. Ryan replies, locked in today bro. You close the Discord. You close the broker. There's nothing on the screen. You sit on the edge of the bed. It's a Tuesday. You have no money in the market. You haven't eaten. You don't tell your parents. You don't text anyone. You don't know what you'd say. The room is quiet. The account is gone. The checklist is still on the desk. Level 5, the student. 3 weeks later you come back with $500 and a different problem. You used to know everything. Now you are trying to know one thing. First morning back, you delete every indicator. All 9. What is left is just price. 1 setup. 1 entry condition. 1 stop rule. You write it down in pen. You will not deviate from it. Pre-market you check 3 tickers. You used to check 40. The open comes. Nothing sets up. You close the laptop. You make coffee. The market is open. You don't look. You write in the journal, no trade. Criteria not met. Tuesday. Same desk. Same 3 tickers. A setup forms. You go through the checklist. Every box. In order. You enter. $50 at risk. You used to risk everything. It hits the target. $54. You write, positive 54. Followed plan. Wednesday, no setup. You don't trade. Thursday, 2 setups appear. Only 1 passes the checklist. You skip the second even though it looks close. The skipped one works. You write that down too. End of week 1. 3 trades. 2 wins. 1 loss. Net, $71. You don't feel like you won anything. That's good. That's new. Week 2. Same routine. The urgency is gone. That's also new. The Discord pings. You set the phone face down. Later you see Ryan's post. $900 up in 3 days. 5 times leverage. 38 fire emojis. You close the app. End of month. 14 trading days. 8 with trades. Net, $340. Account, $840. It was $500. Most pages say no trade. That's the system working. You are dressed differently now. You don't know exactly when that started. The charts open. You feel nothing looking at them. That is the closest thing to confident you have ever felt in this. Week 5. A setup forms at 9:34. You check the list. 12 seconds. You're in. Target hit. You mark it. Close the laptop. It is 10:11 in the morning. You are outside. The market is doing something. You don't know what. 2 months in. The equity curve goes up. Not fast. Not exciting. Just up. Someone in the Discord asks what setup you use. You type 3 sentences. You delete them. You write one instead. Price action at key levels. That's it. 2 people respond with question marks. 1 with a thumbs up. You set the phone down. You open the review sheet. Tomorrow is a new session. The desk is clean. The system is boring. You are, for the first time, not losing money. Level 6, the funded trader. The email arrives on a Thursday. You passed the evaluation. The account is live. $100,000. You stare at the balance for 40 seconds. Then you close the tab. Day 1. Same time as always. Same checklist. Same 3 setups. The account has 5 more zeros but the process is identical. A setup forms at 9:34. You enter. The position is 10 times what you ran on your own account. It reaches the target. $420. Same handwriting. Different number. You close the laptop at 10:05. Everything is exactly as it was. Almost. Day 2. Another entry. Another target. $610 by open close. There is a sound in the back of your mind. You don't know what it is called. You leave it there. Day 3. You're at the desk before your own rule says to be. A ticker gaps up 40% on earnings. It is not your setup. You know that. You enter anyway. $20,000. It reverses the moment you're in. -400. 900. 1600. The screen locks. $2,000. 2% of the account. 11 minutes. You don't move. The rule is on the sheet. You circled it during the evaluation. You schedule a review call. He says it happens to most traders on their first live account. He does not say it the way people say things are fine. You read about everyone who hit their limit on day 3. You go back to the notebook. 1 setup. 3 rules. 4 months of following them. The firm has 17 rules. Yours has 3. Somewhere between 3 and 17 something slipped. The rest of the week you don't trade. You read about position sizing. Expectancy. Drawdown psychology. You've read some of it before. Week 1. Net, -$970. It is a 1% drawdown on the account. It does not feel like 1%. Monday. The account is live again. You sit for 11 minutes before opening a chart. You wait. 7 minutes to open. You go through every box. Slower than before. A setup forms. It is exactly what the notebook describes. You enter at the right size. Not the interesting number. The one you wrote down. Target. You mark it. Close the laptop. End of month. $3,840. 80% is yours. $3,072 transferred out. First payout. It doesn't feel like the number. You don't know what the number is yet. The rule sheet has annotations now. 17 rules understood the same way you once understood 3. The office is the same. The process is the same. The pressure is a different shape than you expected, and you are still learning its outline. Level 7, the operator. The room cost more to set up than your first car. You don't think about that anymore. You wear the suit because it puts you in the right frame of mind. Nobody sees it. You're at the desk at 9. Not 8:30. Not 8. 9. Pre-market takes 11 minutes. You've timed it. 2 names. Sometimes 1. Never more than 3. You write the setup down before the open. If you can't write it, you don't trade it. The open. The setup is there on the first name. Exactly where you expected. You enter. Full. Size. No second guessing. It moves. You close it at the target. Not early. Not late. 2 lines in the journal. That's the trade. It's 9:52. You're done. There's no urge to check anything. That part took years to build. The phone is face down. You made that rule in year 2 and haven't broken it since year 3. The morning is yours. You don't rewatch the charts. What happened, happened. End of month, you move money. More this year than your last full salary. It doesn't feel like winning anymore. It feels like billing. Someone at dinner asks what you do. You say, I work for myself. They ask what industry. You say finance. You leave it there. You've learned that more detail helps nobody. Next morning. Same desk. Same time. Same process. 2 names on the scan. Checklist. 1 item at a time. The setup forms on the first name again. You enter. Target. Closed. You don't celebrate. You haven't celebrated a trade in 2 years. 10:03, done. You pass the rack on the way out. That's level 8. Not yet. The door closes. The monitors go dark on a timer. You're outside before most people have finished their first meeting. 1 call. Accountant. 2 minutes. The rest of the day is yours in the way that most people's aren't. Back in the room, the server rack blinks once. Tomorrow you'll be here at 9. And the day after that. And the day after that. Level 8, the system. The rack runs whether you're here or not. It ran last night while you slept. You stopped setting alarms 2 years ago. The market opened 90 minutes ago. You haven't checked. 1 tap. 11 trades. Clean fills. All within parameters. You put it away. You don't turn the monitors on. The screens aren't where the work happens anymore. Logs. Not charts. Not P&L, system behavior. You're looking for drift. For anything that doesn't match the backtest envelope. Everything in range. Nothing to adjust today. You've been building the second system for 3 months. This is what most of your time looks like now. Edge research doesn't look like trading. It looks like this: entry logic, position sizing, correlation filters. Variables you test in isolation and then watch break in production. System 2 is in testing. 6 more weeks before you trust it with real size. You've learned to wait. That took longer to learn than the trading did. That's the morning. No price checked. No candle read. No trade placed by hand. It executed 43 trades this week without a single input from you. You still find this strange. The useful kind. You leave the door half open. The system handles the afternoon session without a check-in. You used to find this unsettling. Now you find it correct. 2 hours later. Someone in the server posted their first paper trading win. 38 fire emojis. You remember posting something like that once. The exact feeling. The screenshot. The number in green. Same account size. Same percentage. Same week of the year. You close the tab. It's not cynicism. It's distance. There's a difference, even if it doesn't look like one from the outside. The edge used to be in reading charts faster than everyone else. Now it's in not needing to read them at all. Someone will post a screenshot tomorrow. Different account. Same percentage. Same fire emojis. A friend from before asks if you miss it. Miss what, exactly? You let the subject change. The rack is still running. It ran while you ate. It will run while you sleep. It ran before you woke up. That's the edge. And you don't need to be here for it.